Hello everyone. Goods and services tax. One of the hottest topic for discussion today. Do you have questions on goods and services tax? Like what is it? When it is going to be implemented? What are the registration processes? What are the process for filing returns? And many more such questions. Well, all these questions are aimed to be answered in this e-learning course today. This course is divided into 15 modules. Each module contains various topics on goods and services tax. So to begin with, let's start with our first module, which is Introduction to Goods and Services Tax. Goods and Services Tax, as you are all aware, is one of the India's biggest tax revolution in indirect tax regime. But the billion-dollar question is, what is goods and services tax? Well, friends, the answer is, it is a tax levied on supply of goods and services rendered in India. Current taxes to be subsumed under GST are service tax, purchase tax, central sales tax, luxury tax, additional excise duty, central excise duty, state value added tax, state cess and surcharges, surcharge, cess and KKC. GST is a destination-based tax on consumption of goods and services. In simple words, it is a tax system where the end consumer will be responsible to pay tax and avail seamless tax credit. It is a dual tax structure wherein center and the states simultaneously will levy tax on a common tax base. Central goods and service tax and state goods and services tax will be applied for intra-state sale, and integrated goods services tax will be applied on interstate sales. Union territories goods and services tax will be applied for union territories. While we briefly discussed on the introduction to GST, let us now understand how GST works with the help of an example. For instance, a manufacturer purchases inputs or raw materials for manufacturing at Rs 100. It adds Rs 30 as value addition to make the final sellable goods to the wholesaler or distributor, making his selling price to be 130 rupees. Now, assuming this is an intrastate supply, both CGST and SGST would be applied, where the tax rate would be 18%, 9% each for CGST and SGST. Thus, the output tax liability for the manufacturer would be Rs 23, which is calculated as 18% of 130 rupees. And the input tax credit available to him would be 18 rupees, which is calculated as 18% of 100. So, he has to pay only the net tax, which is 5 rupees, to the government. The same process would be followed when the supply happens from wholesaler to retailer and from retailer to the final consumer. As we saw in previous slide, almost all the taxes under current tax regime are subsumed under GST. So let us understand which are the current taxes which fall under Central Goods and Services Tax and which fall under the State Goods and Services Tax. To begin with, let's start with the taxes falling under CGST, that is Central Goods and Services Tax. Central excise duty, additional excise duty levied under the Medicinal and Toiletries Preparation Act, additional duties of customs, also known as ADC, countervailing duty, also known as CVD, service tax, surcharge, cess and KKC, that is Krishi Kalyan cess. All these are subsumed under CGST. Similarly, state value added tax, central sales tax, purchase tax, entertainment tax, luxury tax, state cess and surcharges, taxes on lottery betting and gambling, and entry tax. All these are subsumed under state GST. Though most of the taxes are subsumed under GST, there are few taxes which are not covered under GST. Let us have a look at which are those taxes. First one is excise on liquor, stamp duty, electricity duty, professional tax, basic customs duty and safeguard duties on import of goods into India, and finally the road tax. While we got an idea on what GST is and what are the taxes subsumed under it, let us now quickly understand how the current tax regime looks versus the GST regime. The first and the most important difference between the current regime and GST regime is that the current regime is a origin-based taxation system as against a destination-based taxation system of GST. Under the current regime, goods and services are taxed separately. However, under GST, both goods and services are taxed together. Current regime has a narrow coverage of tax base. As against this, GST has a wider tax base. Administration under current regime is complex due to multiplicity of taxes and laws involved. GST tax administration is aiming to be a tax-friendly, simple and easy. Registration process under the current regime is decentralized for VAT and centralized for service tax. As against this, there is a uniform e-registration process under the goods and service tax regime. Similarly, the tax filing process under the current regime is partially uniform. However, under GST, it is a complete uniform tax filing process. Current regime has multiple taxes. GST has a single tax with dual tax structure, like the CGST and SGST levied on the same base. Verification on filing of returns is done partially manual and partially automatic. Under GST, it being digital in nature, it is aiming at having a system-based verification. Under the current regime, set-off between excise and service tax is available under the current regime. However, set-off between excise and VAT or service tax and VAT is not available. Under GST, all types of set-offs are available apart from cross set-off between CGST and SGST. Under the current regime, interstate transfer of goods to branch or agent are exempt against submission of Form F. However, under GST, interstate transfer of goods to branch or agent are taxable. Under the current tax regime, credits are not allowed on all the taxes. This leads to a cascading effect. Under GST regime, credit is available on full amount up to the retailer level. Thus, there is no cascading effect under the GST regime. Now, let us understand the term supply. Supply includes normal supply, imports, and deemed supply. So, what is a normal supply of goods or services? It includes all forms of supply of goods or services such as sale, transfer, barter, exchange, license, rental, lease or disposal made or agreed to be made for a consideration by a person in the course or in the furtherance of business. Lastly, let us look at what is deemed supply or supplies or activities which are made with or without consideration. The first type of transaction is permanent transfer or disposal of business assets. Say for instance, office computers or furnitures are donated to a NGO without a consideration. Such transaction would be termed as deemed supply. Supply of goods or services between related persons or between distinct persons where the value of such supply would be greater than 50,000. For instance, a corporate guarantee given by a holding company to the subsidiary company. This would be termed as supply. Next is supply of goods by a principal to his agent or vice versa. For example, goods transferred by a company to the clearing and forwarding agent located in different state. This would be covered under the definition of supply. And finally, import of services from a related person or establishments outside India in the course or furtherance of business. For example, a registered person, Mr. A, who is located in India, imports consultancy services from a related person, Mr. B, who is located in USA, in the course of furtherance of business. Such consultancy services would be included under the definition of supply. As we discussed the meaning of the term supply, under GST, the Act has also defined the matters or the activities which should be treated as supply of goods and services. To begin with, let us understand what are the matters that would be treated as supply of goods. First and the foremost is transfer of title in goods. This means it covers a pure sale of goods transaction. Next is transfer of title in goods passed at a future date upon payment of full consideration. This would cover transactions like hire purchases. Next is transfer or disposal of business assets with or without consideration. This would include transactions like sale of office computer or furniture to a NGO with or without consideration. Next is goods forming part of the assets on ceasing to be a taxable person. This would cover transactions happening during the dissolution of a partnership firm. Supply of goods by an unincorporated association or body of persons to its member. This would include transactions like supply of food, gaming tools, books, etc. by any club to its members. While we discussed what are the matters to be treated as goods, we now move on to understand what are the matters that should be treated as supply of service. So, the first one is transfer of right to use goods without transfer of title in goods. Example, renting a cab. Next is lease or tenancy or license to occupy land. Example, lease agreement to give land on lease for a specified period. Next is lease or letting out of the building, including a commercial, industrial or residential complex for business or commerce. Example, rent agreements. Next is treatment or process applied to another person's goods. This would cover situations like job work to be done on others' goods. Next is making available business goods for personal use, whether or not for a consideration. This would cover situation like where a company gives its guest house to an employee for its personal function. Such transactions would be treated as supply of service. While we discussed about the meaning of the terms goods, services and supply, and also the matters that are to be treated as supply of goods and services, we would now move on and discuss what are the activities that would be not treated as supply of service. The first and the foremost is services provided by an employee to an employer in relation to his employment. However, supply of goods by an employee to employer or vice versa would be considered as a taxable supply. Next is services provided by court or a tribunal. Then, functions or duties performed by members of parliament, state legislature, panchayats, municipalities or members of other local authorities would also be not treated as supply of service. Services of funeral, burial, crematorium or mortuary, including transportation of the deceased, would also be excluded out of the scope of supply. Sale of land and building, subject to clause 5b of schedule 2 as we discussed earlier, would not be treated as supply of service. So friends, in this module, we got a brief understanding on what GST is. In the next module, we will discuss about the features of GST.